All right, America the Beautiful. Here we are. We're coming up into the election coming up, and I want to continue talking to you somewhat about what's going on with debt here in the country. And if you look at the Treasury auctions this week, it was very tepid in response. And so you also saw the 10-year Treasury bump up again in response to that. And what we want to focus and talk about is what's going on with the deficit. You think of 20 years ago, roughly the deficit was, $250 billion. Now it's $1.7 trillion. Insanity land, right? Like, no matter who gets in office, Trump or Harris, the Democrats or Republicans, nobody is really geared up towards reducing the deficit in a real way. Everybody's geared up to spending money. And you look back, it was kind of the Bush Clinton years. God, what is that? 30 plus years ago that there was an effort to reduce the deficit. Right now, any type of discussions around that, it's not even real. What does that mean for you and me? Now, the reality is it becomes more difficult. The Treasury auctions, before, just going back to like 2016, they were, auctioning off 20 billion. Now it's 45 billion a crack. I mean, it's just almost double, right? Because they have to get so much money in to fund the deficit. The other piece of that equation is that when you look at countries around the world, there was much more countries purchasing our debt because our debt was, not only the safest, but it was offering a better relative return because everybody was at zero or negative interest rates, and we were in such a low interest rate environment. That's not the case anymore. There's plenty of countries now that, have a positive interest rate return on their, national debt. So this is something that we have to take into consideration. Now, we may get some help in the year ahead where interest rates are coming down, as we talked about in the previous video. No doubt the Fed funds rate, that overnight lending rate, that's coming down. They're going to be cutting rate. We just saw, the growth was, I think, roughly at 2.5%. Core inflation had just come down this past quarter in the recent reading of 2.2%, just a hair above the 2% target of the Fed. So on some level, you've got good growth in the economy and inflation has continued to come down. So the Fed is, potentially on track to stick this, holy grail of a soft landing, meaning they raised rates like they did, definitely did a good amount of damage in certain sectors of the economy, brought inflation down. Inflation also was coming down because of the coming off of the pandemic and the weirdness of all that and the supply chain problems. But that's happening right now as we speak. So what does that mean for long-term interest rates, meaning driven in the bond market? Well, we continue to see the bond markets responding to that. Okay, we've got greater potential stable growth, and so more likely that people are moving to equities, less concentric to bonds, and then that's pushing yield up. And then the other factor is what I just shared about the deficit. And I would say this, the deficit's more of a real problem. The politicians kick the can down the road. Nobody's going to be politicking or campaigning on, hey, we're going to, raise taxes, reduce government spending, and become fiscally conservative. I mean, that's a joke, right? Nobody's interested in that. Everybody's interested in, what are you going to do for me? Where's my tax break? Where's the spending for me? Where's the tax credit for me? Where's, and again, it's just the truth of where we're at as a country, and politicians are more apt to try to buy votes by promising stuff and not taking a more fiscally austere look at things. And ultimately, as a country, we're going to pay for that because, when you get to a place where, other foreign national governments and countries are not as interested to buy our debt, that becomes a real problem. So again, just being aware of it, recognizing, and again, plenty of people are saying, oh, interest rates are going to come down. Interest rates are going to be down, but we're not going to be in for another decade of low interest rates. I would suggest that we're probably going to have higher interest rates ahead. It doesn't mean that, commercial real estate deals, multifamily opportunities won't be great and available. It just means that, if we're at a higher rate, now we've got to be able to adjust and deal with that. And then, as I shared with you in the previous video, you're still going to see that Fed funds rate coming down because they have really ostensibly achieved their objective. And so they'll start cutting rates in a more focused way and really keeping an eye on inflation. But inflation's down. So, it's something that is a concern. It's a longer term concern, meaning the deficit spending. And I would venture to bet you that there's no politician that's going to step up and tackle it until it becomes a real painful problem for this country, maybe in the next 10 or 15 years, or, hard to say exactly when the chickens come home to roost with that. But at some point, you can only kick the can so far down the road. So have a blessed and victorious week, for this is the week God has ordained for you.